What's going on? Welcome back to the channel. So today we're going to talk to you about 𝗖𝗧. I want to go over some of the data points, what is really moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So 𝗖𝗧 is getting dragged down. It's down 2.9%, about 30 minutes left in the trading day. 27.36 is the high, 26.30 the low, and just shy of roughly about 43 million shares being traded. So today's been a crazy day, but then again, I think we generally knew that was going to happen based on Trump's comments and how the market was going to take that. But aside from that, getting right to it, today we didn't really have that much in macro data. Early this morning, though, we did have a lot of things coming out and the market digesting a lot, in fact. One was JPM saying that in 2026, now they feel that there won't be any rate cuts. So they recently went from about 150 basis points, that's what they were anticipating in 2026, to 0. And in fact, they're now anticipating for 2027 for there to be rate hikes. They don't feel like a recession is coming though, because they didn't clearly change their estimate. So they do believe still that the S&P is going to be roughly around 7,700 by the end of 2026. So they anticipate the market to continue to move higher, but no cuts. And again, maybe they anticipate inflation to kind of start inching higher, and maybe that's why they're justifying a hike in 2027. So kind of interesting. But big thing for 𝗖𝗧 and a lot of other financial stocks was this right here. So Trump really wanting to cap credit card interest at 10%. And it's rather interesting if you actually look at how the market's trading, a lot of straight just credit card companies and fintechs. 𝗖𝗧 is being treated no different than just a credit card company. That's it. Like Capital One, American Express, 𝗖𝗧 is pretty much getting hit on the same par as them to a certain extent. But today there really wasn't that much in news associated to 𝗖𝗧, no press releases, no SEC filings. Luckily enough, you do have Anthony, and this is one thing I've really liked about him over the last 6+ months. He's been more engaging with investors on social media. So if he sees something, he will respond, both positive and negative. So he did actually bring up about that whole credit card type of thing. Spoiler alert, he doesn't actually say, hey, this is good for 𝗖𝗧 or this is bad. He just brings up awareness on how bad credit cards are and how essentially, which on a side note, he's retweeting this individual who kind of explains this right here. But ultimately, Anthony's alluding to how people will be pivoting from credit cards to loans. So through that, obviously 𝗖𝗧 will be able to benefit is a increase in loans. So kind of makes sense because he does say that loans are right now around 10% or something like that, I believe he said there. But yeah, pretty good stuff in reality. So I initially thought that there would just be an increase in competition, and I guess depending on the loyalty base of each and every own company's members, that would be kind of the catalyst enough. But I didn't really feel that, or I didn't really put two and two together, that people would be, I guess, pivoting to loans. So might be an interesting type of 2026, that's for sure. But again, this could be still, I feel like a lot of people haven't really brought this up yet, but this could be, again, another one of those rants that never lifts off the ground. It's just meaningless words. So let me know your general thoughts on that in the comments below. When it comes to shorts, they are returning 649,000 shares. So I like to analyze this type of information because shorts could easily double and triple down, but the fact that they are not, the fact that they are returning is very bullish. It shows that today's sell-off is not justified. And I do completely agree. I did sell some puts because I do feel that today's sell-off isn't justified. I didn't do any short-term ones. I did more for May and onwards. But yeah, this, in my opinion, is not justified at all. But 9.54% of the free floats being shorted works to be 118.26 million shares overall being shorted. From a option standpoint, 46 million in calls, 13 in puts. So it kind of matches with the ratio for common stock. 45% of all the options being done are bullish in nature. From a bull standpoint, you do see a consensus for it to be roughly around 28. So bulls are calling BS in this sell-off and feel like it will recover. One thing to take note of though is we're starting to see a little bit of a dip. This is most likely last minute fears associated to the data coming out tomorrow. So ADP weekly, as well as the dreaded CPI, because like 2 months ago, inflation wasn't a issue. Actually, rather Powell, he was saying that inflation is on target. So nobody really thought that inflation was going to be brought up to be the top priority now. So a lot of eyes are going to be on CPI. So that's why most likely you're seeing a little bit of a dip going on for that. But nonetheless, from a bear standpoint, you see a consensus for it to be roughly 26 to 26.50. So that's pretty much where we are at right now. So there definitely is a lot more upside than down. These are some of the transactions occurring so far on the secondary market above $100,000. And I always like to analyze what is truly happening behind the scenes. And based on this, it does show that big money is buying. There's obviously some pockets of selling. Anything with a bid is a sell, but most of these transactions are buys. So definitely good to see. If there's anything abnormal that does happen after hours, I'll do maybe a late night video because I know sometimes there's some after hours activity and so forth. These are all the transactions occurring on the dark pool above $100,000. Dark pool is a little bit harder to distinguish what is buys and sells because you kind of have to correlate it with the stock price, what was happening at that time, and plus some of the transactions that happened before and after. But some big ones, 5.6, 3.2, 1.6, 1.5. So a lot of big transactions. So they're still slowly coming in. Aside from all of that though, with it right now down 2.7%, 26.66, it is trading smack dab in the middle between this pivot and this S1. So 25.25 and 27.26 is going to be the next strong support and target. And this is the 1 day chart. So if you're looking at more swing trading, if you're wanting to day trade right now, 26.30 and then 27.76. So for tomorrow, just watch for kind of both of those. So when it did dip first thing, it kind of bounced off this general area, 26.30. But it didn't really phase it all that much. So I wouldn't really consider that to be a extremely strong support level. So let me know your viewpoint on that. Moving on from here on the actual chart itself, as I mentioned in my weekend video, it was going to be hit and miss. You really needed to see SoFi get over that 100-day moving average early in the week. Still not down and out just yet, but it is right now below that 10-day moving average as well. So it shows that it's losing a little bit of momentum. With tomorrow's data, that's going to be the catalyst to either push it above, have it recover, ideally above that 100-day moving average, or better yet, that 50. But SoFi's always struggled with that 50-day moving average, as you can kind of clearly see. But it'll be a big deal tomorrow. That's kind of the moral of the story. Stochastic RSI, you see it at 46, so it is neutral, so it's not really overbought nor oversold. Still no new analyst ratings, so if I was a bear analyst, I would be giving a rating pretty much right quick. Even if I gave a rating, let's say last week, I would just reiterate that because that's what happens, right? Because there's absolutely no logic in what the bears do other than to manipulate the stock price. They might argue saying, oh, something fundamentally changed, but nope, nothing fundamentally changed for any of these bears to kind of give ratings. So yeah, it's a fun ride. As I've stated many times in the past, it is very difficult to catch the bottoms or the kind of peaks. Best thing to do is just all cost average, or as I've been sharing with you, just sell puts as definitely the best way to go, because it gets you either a premium or potentially you get to buy it at a discount. Because I think today I did sell 22 and also I think it was $19 strike price puts. So if I asked any of you, would you buy SoFi at 19 or 22? I'm sure most of you would say yes. So definitely consider selling a put, in my opinion. You guys do whatever floats your boat though. One final thing, I just put out a promotion on my stacked account. So if you're looking for a lot of solid buy signals on stocks, options, crypto, lowered this from $22 down to $10 a month. These are some of the day trades that I just put out. You can kind of see some of the highs. So they were absolute bangers with the exception of this one. But even SoFi, when I did put it as a buy, I did signal it at 26.30. So obviously caught the bottom. Could have made some pretty good money just swinging that, but everything else is on point. So definitely worthwhile to pop over there and check that out. So I'll be keeping this at the $10 a month up until the end of this week. So if you get in, prices will never increase whatsoever. So definitely worthwhile to pop over there and check that out. With all that, appreciate all you watching.